Hello, I'm John Crowther. Welcome to This Week in the Markets. As the first quarter of 2024 ends, we see central banks still struggling to grapple with inflation. We're starting to see various central banks throughout the world go in different directions. That's something for an investor to keep an eye on. The Swiss National Bank has actually cut rates. The Bank of Japan has increased rates from the negative bound to zero. The Federal Reserve is waiting and seeing. They talk about 2 to 3 rate cuts at the end of this year, though there's been pushback on some of the voting members who are speaking after last week's meeting, including Waller and Bostic, talking about a data dependency approach and the idea that maybe no cuts are necessary to keep stable inflation as well as a robust economy. This is all remains to be seen as Chair Powell is speaking later today. For its part, the stock market indices reached all-time highs. Other commodities, such as gold, also reached all-time highs. The 2-year and 10-year stay in an inversion. The 10-year Treasury at 4.25% and the 2-year at 4.4%. A shallow inversion and one for the record books, going on well over a year now. One thing I'm taking a look at right now are the various global currency pairs, particularly the Japanese yen to the US dollar. The yen has weakened to 151 to the dollar, an area where the Ministry of Finance of Japan have talked about strengthening and supporting the yen. They talked about that last summer, and that brought about both a bond and stock correction in US domestic markets. I'm John Kreitler. This was This Week in the Markets. Have a great week.